Welcome back, everybody. Part 3 of the Ichimoku for Crypto series. This video, we're going to cover the Awesome Oscillator, some basic Fibonacci levels, and then the cloud twist. So to get started, I just plotted some basic moving averages based on the Awesome Oscillator. To get the Awesome Oscillator, just go ahead and type it in. I'm not making this name up. It is true. Go ahead and throw that on there, and this will give you the histogram down here. So this is made of two moving averages, a 5-period and a 34-period. The 5-period is in pink, and the 34-period is in green. And just like the Ichimoku, this is the high and low divided by 2 for each period. So how do we use this? If I go ahead and pop off the clouds here just to show each kind of component here, we can see the green and red changes in the histogram itself. So if we look up at the actual moving averages, we can kind of get an idea of what's going on. So as the 5 moves away from the 34, this is what corresponds to kind of the green histogram. And then as the 5 moves closer to the 34, it'll change red. So one thing we want to pay attention to is a 0-0 cross on the AO. What this corresponds to is when a cross actually happens between the 5 and 34-day period. So that's just, again, this is just plotted in a histogram fashion. And up here where the the dotted lines are to show where some crosses are happening. And then again, this is just illustrated on the histogram. So that's one confirmation we can use is a 0-0 cross on the AO. That can go along with some cloud breaks or some cloud bounces. The next thing I use the Awesome Oscillator for is for some divergence patterns. Divergence happens whenever we have a price that just kind of spikes through. And then on the actual oscillator itself is showing like a reverse or an inverse of what's happening with the price. If we go ahead and look at the 4-hour chart, I'm going to go ahead and pop the sticks back on. We can see over here, this happened just recently on Bitcoin. We have this initial push up here to the 20K, and then it tries to go ahead and push through the 20K again. So we can get this little double top. But if you look at the oscillator itself, it's actually coming downwards. So this is an indicator on the 4-hour chart again that some type of divergence is happening. And then we see this move down and it goes ahead and tests down the 10.5 level. And now we can see that the moving averages are possibly going to cross here, which could correspond obviously with our 0-0 cross. I mean, as you can see, this is still just consolidating. You can see there's 1, 2, 3. This would be potentially the 4th 0-0 cross on the oscillator. So this is just a good sign, you know, that there's some indecision right now, which you can see in the overall pattern. This is, you know, just a kind of a running flat right now, which is a consolidation. So the next thing I want to cover is the Fibonacci levels. I don't know if you guys are too familiar with them, but I'll go ahead and show you just how to kind of set one up and what kind of levels we're looking for. So if we just go ahead and get rid of these. So I zoomed out onto the daily chart, and the first thing you want to do is go ahead and get your Fibonacci tool, and just look on your charts, any chart you use, and find a low point. I'm going to use the low point from 716, and I'm just going to go ahead and pull it up to that current high of around 19,800, 20,000 to give this example. All right, I just wanted to change the color and make this a little bit more better illustrated. So what I did is I took the low point of 1868.44, and then I went to the high of 19,874. So what the fib level tells us between this period is if we take the difference of that, which I already did the math here, it's 18,006. That's probably an easier way to do it, but whatever. Is this, whole thing right here. So when we're talking about fib retracements, a 50% fib retracement, 61.8 fib retracement, we're taking basically this price of 18,000, and you're going to multiply it by whatever fib extension it is. So what I mean, 18,006 times 0.5. Actually, we'll just pull the calculator over here. I already have it up. So 50% fib retracement would be $9,000. So if we go ahead and go back over here, the Fibonacci already has it plotted out for us, right? And that's the 50 fib level, 10,871. So if we go ahead and bring up our calculator again, we're going to take 19,874 58 minus that 9,002, which gives us 1872.58. Again, I didn't include the change on that, but that gives you the basic idea. So we can use the same principle for the 61. First, you're going to take the difference times 0.618, 127. We can take that number, subtract it from our high, $87.46, and this is $87.47. Again, change is not there. Now you can use Fibonacci level. Let me go ahead and throw this on. You can use Fibonacci levels on any time frame in any chart. Just remember though that they're not all weighted the same, just like everything else that we've been covering. If you have a 50 fib level on the daily chart, that's going to be a little bit stronger of a bounce than a 50 fib on, say, the 15-minute chart. So you can see, obviously, with the most recent move down, let me delete this. Go ahead and pop that back on. So you see on the daily chart, the most recent move down did touch our 50 fib level. So let's go ahead and make one on the 4-hour and see what happens here. And again, you don't have to take it, from way back. If you want to just get this kind of last trend here, you can do the same thing. And you see it kind of hit our 61.8 fib level and a little bit below on the 4-hour. And now we're trying to continue our trend back up. So you can use this on any chart in any time frame, and just remember to work your way down from a higher time frame. Because if you see, so we have the 61 fib there on the 4-hour. We go to the daily, we can actually pop back our other fib. Make that. So now we can see, the 50 fib on the daily. And then we also have this little zone of the 61.8 fib on the 4-hour right here. And that's where our huge little candle and our spike actually happened. The correlation of these things, along with some AO action, is a strategy in itself, and you don't even need Ichimoku. But I like the Ichimoku just because of the visuals that you can get from this. I mean, all this analysis does work together, as you guys will start to notice that. So as far as, say you did get in this trade at this 50 bounce, now what else can we use the fib for? That's what our extensions are going to be for. It's the same kind of levels. The 61.8 is the golden ratio. If you guys don't know what that is, I could probably make a video of itself just nerding out, but just know that 61.8, 1.618, all golden ratios in the Fibonacci level. So if we see here on both of our fibs, this area would kind of be our take profit zone. This allows us to kind of get out earlier than if we would be in with the Ichimoku system. So let me just illustrate that here. All right, we're just going to look at it over here. Let's go back out to the 4-hour. All right, so I switched this out to my chart just for this example. The 4-hour fib is the green, and then the daily is the white. So what are we going to use this for as far as understanding how to get out of a trade, or take profit area, I should say, if you've got in this? You're going to want to look for the same levels, the 61.8s here, 1.618, depends on which way you draw this. There is no real wrong way. You just need to understand how you drew it and what it corresponds to. All right, I don't want to use this current example, so we're going to just go back a little bit to show you what I mean as far as getting out of the trade kind of before the Ichimoku gives us the signal. So if we head over here, yeah, you know what, let's use this one right here, this most recent, not recent, but this huge trend here. Okay, so we're on the 1 day, and we'll just use this 200 up to 786. So say you're in this trade already and you don't know, maybe you got in down here on the 50 fib bounce, right? At August 1st, 2016. Congratulations. Hopefully you're still holding. But nonetheless, if you're using this on another chart that you're just trading, your fib levels and the fib extensions are going to be valid here as well. So 61.8 right here. At this price level would be take profit area. as you can see, this did kind of rise up, and it hit, and then it finally came back down. Now, if we're using just Ichimoku, our sell signal, where's my tool at? Our sell signal would have been somewhere down around here, which is about a 20% loss. The fib levels allow you to get out a little bit earlier than Ichimoku would actually let you. And then you can just get back in and run the same process. This is, a cycle. Now, it doesn't have to be on the Bitcoin chart. Like I said, this is perfect for altcoins as well. You just need to find the correlation. And yeah, just work with your main fib level. And then if you're trading on the 4-hour and daily, those are the two fib levels you want to use. You can also use the 4-hour and 1-hour as correlation. But this should help you guys get out of trades a little bit earlier than expected. And I mean, I know this ran up and ran up, but we're using, at this point, you can use Ichimoku to get back in after you already took your trade. Or maybe you move your trade up to break even and then add on here and just kind of continue to follow it with trailing stops. So, and yeah, the last thing for the Fibonacci level, I mean, just you can, like I said, use the AO as well to find our entries. And then when you use them all together, we have, a nice kind of complete system that we can get multiple confirmations that make our trades highly probable to happen. So again, we look over here, we have this bounce at the 50 fib level. It's under the cloud, so that's what we're waiting on as a buy signal. And then we do get the TK cross under the cloud. Our AO starts to cross over as well. And then our price breaks the cloud. The Chikous fan kind of rises with it, and then we're off to the races. So that's, an example of using kind of all three of them together to get better confirmation. Now, it doesn't always work out like that. So, you just have to go back and back test your ideas. And, are you waiting for 3 confirmations? Are you waiting for 4 confirmations? Is it a TK cross above the cloud or below the cloud? So with that, we're just going to go over to the last thing I want to cover, which is the cloud twists. We use the cloud twists in conjunction with cloud breaks. They kind of give us another momentum idea as far as how strong the cloud break's going to be. As you guys started looking through the chart, you'll notice, some of the clouds are actually flat. Some are actually spread open. So that's kind of what I want to cover, and just so you know the differences and what you can look for as far as some of the cloud breaks. So I'm just going to clear everything off so we have a better picture of just the clouds itself. Yeah, let's see. So we'll just use the most recent Bitcoin because this is a nice flat cloud here that we can see on the 4-hour chart. Now, just like the TK, the flatness in the cloud acts as a magnet. So you can think of it as the price comes up through the cloud and you see this kind of flat pattern. It's a good sign that this might, slowly start to move back down and kind of go back into the equilibrium pattern and wiggle around before we finally get, the more significant break. If we take a look at ETH, that's kind of the best example I can think of most recently. Over here, we have, take this off here. So if we go from, just a cloud twist, we can go 30 bars back. Because remember, our cloud is plotted 30 sticks ahead. And this kind of gives us our future price prediction. So if we go back to 12:17 at about 3 a.m. or so, we have our cloud twist to the bull. If we pop on our sticks, or was that 3 a.m.? I was right about here, so let's go ahead and put this on. So we see, even though the cloud twist is bullish, our price is still in the cloud here. So, as far as momentum is concerned, this second one is way better momentum than the first one over here. Remember? So if we go ahead and see where the cloud was 30 sticks ahead over here, we don't have a cross. We're kind of right over here. So you guys can just, forget about this picture right here. And that's kind of where it would look like without the price. So, I mean, this isn't a very strong indicator. And then as we develop on, you guys can see the price kind of drops into the cloud. And if we bust our Fibonacci levels out, you can see it almost hits the 50 fib area, which corresponds to 30 sticks ahead, the cloud cross, or the cloud twist. So that's, it's risky because it's in the cloud, and that's our no trade zone. But again, using the Fibonacci levels kind of gives us an idea of where, what kind of momentum we can expect from this move. And that's kind of exactly what happened. It shot through the cloud and had some nice momentum up finally. What is that? 25, 30%. So that's kind of an example of the fake break as to why that happened, because we didn't have a bullish twist on this first candle. It came, much later. So the difference in twists is something to pay attention to so that you don't get stuck in the fake breaks. And then, one more thing we can just cover here to see, another indicator of why this first kind of break is a fake-o. You see this kind of W pattern here? Let's go ahead and turn this off. Excuse me. So you can see this little pattern here. This is a corrective pattern, Gartley pattern, I think they call them. I don't know, I forget exactly, but basically what happens is you have this W form, and at the top it's going to retrace a bit and then continue on its way. And that's kind of exactly what happened. And then you can see the correlation whenever we put the Ichimoku back on, and as well as the Fibonacci levels. So this is a perfect wave setup here for us. We get the fake break, and then it comes down and continues on its way up. So all things we can look for, and remember again, the AO, our 0-0 crosses are very important. So if we waited for 12:16 at about 3 p.m., it crossed under. And then finally at 12:18 at 1900, it got our 0-0 cross to the upside, which, as you see, corresponds to the cloud break and the CS break as well. So these work together nicely, and that's kind of why I like to put them all together. We get a nice visual. It can get a bit messy, but once you guys figure out your color patterns and what kind of styles you like, you guys should be reading charts like masters. So the main thing to take away from cloud twists is you want to use them in conjunction with your cloud breaks, because they're going to kind of gauge how much momentum they have. So if you have a flat pattern in a cloud twist, you kind of know that might be an indicator that's going to come down and retrace a little bit. So you put on your 50 Fib, or you put on your Fibonacci levels and wait for your price to come down. Use the confirmations on the AO and the TK crosses, and just have some fun with it. Go back into your charts and back test some of these ideas and see if you can maybe get into some good trades on paper, and then use that to influence your next trade. So if you guys have any questions, go ahead and leave it in the comment box. So there's probably going to be one more part to this series that I'm just going to do some bonus material on things that I found that work well with all these things, like kind of put together. So hit like, hit subscribe, and I'll talk to you guys later.